from the RBA. I mean, they've been neutral but dovish, and there's a possibility that they may come through with another round of one, at least one, or just one round of easing in 2020. And so that is something that could be a risk, especially in the front part of the year. For New Zealand, the outlook for New Zealand has been brighter, although the PMI manufacturing number that we just got was ugly, and I think that could have a little bit of residual impact on the New Zealand dollar. But the government has loosened the purse strings, and by loosening the purse strings, they've, in combination with the Reserve Bank of New Zealand's prior rate cuts, outperformance, I think, is likely in 2020. I think you're going to see less risk. You're going to see, modest 2% growth, which is obviously higher than the 1% growth expected for Australia. And I think that, on a relative basis, New Zealand and the New Zealand dollar is going to end up outperforming the Australian dollar because they've been less willing to lower interest rates. Inflation, unlike Australia and other parts of the world, which are subdued, is actually on target in New Zealand. So I don't necessarily see a rate cut in 2020 for New Zealand. So, New Zealand should probably outperform some of the other currencies on a thematic basis. Although in the near term, as a result of today's PMI numbers, we could see a little bit of a pullback in the currency. And then the Canadian dollar. Will the Canadian dollar get a Megxit boost from Prince Harry, the Dutch and Duchess of Sussex, basically moving to Canada for part-time, probably full-time? We don't know. But what we do know is that Canada will be affected by two opposing forces in the coming year. There will be continued slowdown in international trade. There's been downward pressure on raw material prices and obstacles for investment for North American countries. On the other hand, though, of all the major economies, Canada has the most fundamental strength. The labor market is very, very strong, even though 2 months ago or 2 reports ago we had an ugly number. For the most part, there's been relatively strong job growth. And jobs create spending, which creates growth, and basically is a virtuous cycle for the economy. And so the healthy labor market should promote consumer confidence as well as household spending. And we've also seen a recovery in the darling of the Canadian economy, which is the housing market, particularly in Toronto and a little bit in Vancouver. So that could lead to an outperformance of the Canadian dollar. Now, some people believe that the Bank of Canada could lower interest rates this year, but I think that that's probably unlikely. The bar is relatively high for a rate cut from Canada. They're going to avoid recession. That's not a threat at all. They've seen a modest growth in spending, housing. Policy is likely to remain unchanged. So the Canadian dollar could very much be an outperformer.
Now, the last look in the FX land is at cable. And of course, cable now is a story of past Brexit. Brexit is a reality. It's a done deal. But I think the market is underappreciating, now that Brexit is kind of been negotiated, all of the day-to-day friction that Brexit brings. The more I read about it, you have to understand, here are the frictions that did not exist or don't exist now that will absolutely exist within a year. The border trade friction. There will now be a hard border in Northern Ireland. That is going to create lots and lots of stopgap measures, right? Travel work friction. Now Europeans are going to have to get what's called settled status. It's all bureaucracy. For the most part, most people should actually be able to, I guess, live as they do now. But anytime you put a barrier in front of a population, you're always going to have costs, right? Every time you have friction in any kind of a transaction, it always creates higher costs. That's the key thing that I think the market is underappreciating, because when you look at the data, it is continuously disappointing. Now, you could say, all right, this is just simply the last of the Brexit angst. The moment they negotiate the deal, it's all going to be fine. But my argument here is that no, it's not going to be fine because UK could be facing a very, very serious existential threat to its financial business. If they do not give in to European rules, and remember, the whole point of Brexit was that we don't want to be ruled by Europe, right? I think it's very, very likely that all the financial transactions that London is known for right now are going to move over to the continent. They're going to go to Ireland. They're going to go to Dublin. They're going to go to Netherlands. They're going to go to maybe even to Paris. Certainly, the Germans are not going to allow clearing, which is the basic plumbing of all financial transactions, to stay in UK if they don't follow European rules. The moment clearing leaves UK, you can kiss the whole UK economy goodbye, because as far as I'm concerned, UK economy is the City of London. It's 11% of the GDP. It's like 9% of total UK economy. And honestly, if you look, UK is basically London and just a wasteland of economic inability everywhere else in the country. It's literally Albania surrounded by London, to put it very dramatically. So unless the City of London maintains its preeminent position as the financial center of the world, I think the Brexit story becomes much worse than people think. And that is the risk the market is just not pricing in. It could be a slow bleed, but it's one of those kind of bleeds that could be existential in nature. So how do we turn all of these macro views into interesting trade ideas? This is what you guys really came for, and this is what we're about to deliver for you. So let me turn over, first of all, the trade ideas to Kathy, and then I'll pick up some of the other ideas that I have in mind. So go ahead, Kate. Tell them what you do and how you do it.
So what we do is, this is a lot of information that we've shared with you on a fundamental basis. These themes will evolve throughout the course of the year. They even sometimes change on a week-to-week basis. So we have found that the best way to trade has always been a fusion of fundamentals and technicals, taking the big stories, the big themes, the big ideas, and coupling that with our technicals to give us the best, highest probability trade ideas. So what I do is every single week, and sometimes a bit more often than that if it changes, I update my heat map. And this heat map, which, if you click on any one of those, will provide a more detailed look into my views on, on each of these economies. But the whole idea is that I will have a bias. We talked about this bias. Like I talked about how I'm bullish euros. I talked about how I'm bullish Canadian dollars. This week I was bullish the Australian dollar, although I'm going to turn bearish quite soon ahead of, as we basically get the effects of the wildfires from Australia. And for most of this week, I was bearish dollars. These views usually stand for a week, 2 weeks, depending on how things are. And I basically look for trades in those directions. If for example, I get a signal to buy the euro, and I refer the euro US dollar, and I refer to my chart, and I see that the heat map shows I'm bullish euro / and bearish US dollars, then I'll take the trade. However, if I am bearish euros and I get a euro buy signal, I won't take the trade. And that's how I use my fundamentals to basically filter out the bad trades. For many of you, it's really hard to figure out what the bias should be for the current period of time, whether we should be euro bullish or Aussie bullish or Aussie bearish. So I do that for you by providing the heat map. And then what we do is we couple this with a very unique and powerful indicator that exclusive indicator that I created called the Zip Trader. And what this indicator does is, in theory, it's very, very simple to understand. Where, you know, we have a red and green background. The red background means that we're in kind of a sell zone. The green background means that we're in the buy zone. So when the candle crosses the indicator line, which is the blue line, in the green zone, the candle will turn green, sending a quote unquote buy signal. If it crosses below the indicator line in the red zone, it will turn red, sending a sell signal. So here you can see there's both greens and reds, right? But the only trades that we take, because if you refer back to the heat map, and this is, you know, just this past week, if you refer back to the heat map, this week I'm bullish euros and neutral kiwi, which means, okay, you know, and actually I was a little, and when I was talking to our members, I was telling them that I'm neutral, slightly bearish, but as long as I was not euro bearish and kiwi, you know, bullish, I'd be basically be only trading euro kiwi to the long side. So when the setup in the next chart that you'll see triggered with my candle crossing above the indicator line in the green zone and turning white, sending a buy signal, that's when I buy. And this is the way I do my swing trades in combination with basically with the heat map. I call this my Kathy heat map. And, you know, I just want to show you that how this, you know, works on some live charts. As you saw earlier, I am bearish US dollars, bullish Canadian dollars. I've been that way for the past few weeks. So I didn't take any of these trades. I took this trade here where we basically sold dollar CAD and, you know, rode it for a little bit of a move, not a huge move because volatility has been low, but, you know, a little bit of a move. A nicer trade was this one where we crossed above the indicator line in the euro, and my candle turned white, giving me a buy signal. And if you look back at the heat map, I was bullish euros, and I have been and will probably continue to be for some time, and bearish US dollars. And this, so my fundamental bias matched up with this trading signal, validating this trading signal, confirming that I should take this trade. And this was also a very nice move higher in the euro. And, you know, there are countless examples of this, like, for example, long Aussie, I was bullish Aussies. These are very recent trades. I was bullish Aussies. We had a really nice move higher in Aussie. And right now I'm talking to, you know, some of our members talking about how, you know, I'm bullish euro kiwi because we had that terrible kiwi PMI numbers, and if the background turns green and we cross above the indicator line, I'm going to want to buy. I'm not going to do anything until that happens, but I'm going to be looking to buy that pair. And so that's basically, you know, how we fuse our fundamental heat map with you know, technicals to basically turn some of these thematic ideas and macro views into trading opportunities. Now, Boris will talk a little bit about how you can do that with indices.
Yes, give me just 1 second, sorry. Okay, so while Kathy concentrates on swing trades, I spend all my, sorry?
And currencies.
And currencies, right. I spend all my day trading indices and commodities. So that's how we kind of divide our structure. And the fundamental motto that I follow in my day trading methodology is don't chase, retrace. I'm a big believer in taking the highest quality probability trades on a day trading basis. Now, I use a lot of similar concepts as Kathy. In other words, when you're looking over here, this is the S&P 500, the ES, right? The mini ES. You can see it's clearly in a big uptrend, right? The trend is green. It also happens to be above the daily close. So yesterday's daily close. I'm sorry. This is yesterday's close. So it's above yesterday's close. It's green. That's all very, very supportive of buy propositions. I have a special indicator called runner that gives me signals over here, as you can see, like white candles that tell me when the momentum possibly turns to the upside. But, and this is the key thing that we've introduced that makes it so much better, we use this indicator very sparingly, because like all indicators, it's actually, of course, can be good, or it can give you lots of false notes. So I cull out false notes by only taking this indicator clues when it is giving you positive moves within the retrace zone. And I'm able to create a retrace zone. One of the great sort of breakthroughs that I had was that instead of just, I was never a big believer in Fibonacci, because Fibonacci is very arbitrary. Where's the point of starting? Where's the point of ending, right? Well, the beautiful thing about our structure is that we don't have any arbitrariness. We use my Fibonacci directly from the day's open or the day's close. And I know that's not conventional, but it's incredibly useful, because if you think about how day trades are made, traders are looking at where's the price action during the day. Is it above yesterday's price action? Are people buying? And if that's the case, then it's a high probability that when prices kind of, retrace a little bit and turn back up, they create a buy trade. So this is obviously a strong buy trade. Let me show you a strong sell trade, because over the last couple of days, we've seen gold correct. Gold had a big move up, but it's been in a correction on a day trading basis for the last couple of days. So what do we have here? We have a red trend selling. We have prices below the prior day's close, right? And we have these beautiful Fibonacci retrace signals, right? So we're not selling bottoms. The thing that is so difficult during day trading is we don't chase. When you chase, you're going to sell bottoms or you will buy tops. And you can never make money, even if you're right on the trend, right on direction, right on everything else, by doing this, because you're going to get stopped out because you're stretched out too much. So what we do is wait until the prices turn back towards their natural stronger state. Here, this is the reason why I showed you two levels here, is because this is the Fibonacci retrace from this level over here. This gives me a signal over here, which is a short. Then we have more selling. So the Fibonacci low comes over here, and here I get more signals over here that gives me selling into gold for about $4 or $5, which is quite a nice profit on gold. So even though we have very different methodologies and very different approaches between what Kathy does and what I do, we both use these very distinct, specially developed tools for BK to help us time and make the highest probability trades we possibly can, whether they be on a swing basis or on a day trading basis. And now I want to come to you with what I think are some of the more interesting trade ideas. And even though, of course, as I said to you, I day trade, some of these ideas are very long term. So I want to share with you what I think are intelligent ways to participate in ideas in 2020. Let's take a look at stocks first. Here's the price of the Dow Jones against the S&P 500. This is an astounding decoupling. You have to understand that literally twice as much profit in NASDAQ as there is in the Dow Jones, right? That's incredible. Why is that happening? Well, because essentially the NASDAQ is FANG stocks. FANG stocks are like literally 50% of the gains in the NASDAQ, and they're like 5 stocks. So when you look at this, some of you who may be old enough to remember something called the Nifty 50. This was in the 1970s. Polaroid was Nifty 50. Xerox was Nifty 50. I forget what some of the other ones are. But the bottom line is, literally, they're all bankrupt, useless companies at this point. What we have with FANG is a very similar idea. 4 or 5 glamorous stocks that everybody is buying until they stop. And when they do, it's going to be a very ugly move to the downside. So the most interesting thing And the trade that nobody on Wall Street loves. I was on Trading Nation this week, and everybody ridiculed me for this. Everybody ridiculed for me, which is one of the reasons why I know I'm probably on the right side of the market in this, which is that everybody loves the Nasdaq and everybody thinks the Dow is just boring and horrible. And my argument is, if you want to make an intelligent bet this year, you probably want to be short Nasdaq, long Dow. Now, it's not working right now, and it may not work for another month or two, but trust me, I really believe this. There will be a month or two or three when this thing is going to fall like a knife straight to the bottom and collapse maybe 20-30%, and the Dow is going to pretty much stay stationary. And so to me, the trade of short Nasdaq, long Dow is one of the more interesting ideas that we should consider. One of the reasons, of course, because everybody's bullish. This is not even accurate. This is now at 97. This was at 89 just a couple of days ago. When we were at the global financial crisis, we were at 4, right? The time to buy stocks was when we were at 4. The time to buy stocks is not when we're at 97. If you want to be able to have any confidence in going forward. Excuse me. This is a chart that Kathy showed you about VIX. Now, VIX is not at single digits, but it's super, super close. And the thing we know about volatility is it's always mean reverting. That when it gets into the single digits or it gets close to single digits, that is clearly not a time to buy stocks. So, am I telling you to sell all your stocks? No, just because there's absolutely no idea. We may still have more rally to go, and they certainly don't want to miss any of the upside. My argument is, if you're going to be in the market, get yourself some intelligent hedges. And my ideas for some simple hedges are the following. The simple trade is to simply short the Nasdaq, go long the Dow. The correction is going to hurt Nasdaq much more. It will fall much harder, much faster, and it's a relative trade bet. Basically, Nasdaq falls 10%, Dow falls 5%, you're up 5% in that trade. Another hedge trade that is interesting, but literally lottery tickets. This is lottery tickets, but it's intelligent lottery tickets. Is to buy at the money calls on something called the SQQ. This is a triple levered bearish bet on the Nasdaq, meaning for every percent that the Nasdaq falls, this is going to fall 3%. Now, the way this works is it's an inverse bet. So it rises when the Nasdaq falls. This particular instrument rises. I, under no circumstances, advise you to buy the actual instrument because it's literally a way to burn money. But if you buy calls on this, let's say you spent 50 basis points of equity per month, one of these lottery tickets could really hit out. It could be a 20x to maybe even a 50x trade if the Nasdaq collapses 10% on that month, because that's 10% levered 3 times on a call basis. Boom, huge amount of trade. And then another way to trade is going back to the volatility idea. I think even if volatility stays low for a while, there's almost a certainty that there will be some blow up in volatility. The volatility is going to go from 10 to 25 in a matter of days, just like we saw in 2018. And so even though I don't know which way it's going to go, the intelligent trade here is to simply buy at the money straddles on the VXX. This could be maybe once a quarter. You buy the straddles and nothing happens, you burn money. But then one of those quarters, you're going to have such a massive explosion that it will pay for all of the lottery tickets that you're buying. Regardless of what you do, this is all defensive equity ideas. It's implied that you're in the market. It's assumed that you think the market is going to go long. This is a way to make sure that if the market doesn't go up, you have some interesting, intelligent insurance to take your position the other way. Now, gold is its own story. It's very possible that we could have a strong equity market and strong gold, which is why you can't really think of gold as kind of like a hedge to the market. The gold story is in and of itself very, very strong. And here I have some actually really interesting, very specific ideas for you guys to consider. The simplest and easiest trade in gold is Newmont mining. If you don't want to get fancy, if you don't want to use any kind of complicated speculative tactics. Newmont Mining is the largest gold miner. It has a 2.6% yield. They actually just raised their dividend yield. And the most important part is it's the only gold miner part of the S&P 500 index. And since the whole market is essentially indexation at this point, if gold rises, all the institutional money is going to have to allocate more and more capital to Newmont Mining as part of the S&P 500. So you have this incredible tailwind behind it that actually is going to help the stock. In the meantime, you hold the stock. It's a nice dividend yield, and you kind of set it and forget it. It's a sleep away grandmother trade, but it's a great, clean, simple trade on gold if you don't want to get too complicated. A more complex trade, and one that's interesting, is if you believe that gold is really going to catch a strong bid, then here's what happens. If gold rises, then gold miners are actually very much levered. The price earnings of gold miners explodes with every $100 gain in gold, because obviously they have a fixed cost and they have this variable profit that the moment gold goes up, their earnings are going to go through the roof. The higher the earnings, the faster the rise in the stock. So it's totally in the past rises of gold rallies. If gold goes up 50%, the gold miners could go up 300 to 400%. So an interesting pairs trade is to be long the gold miners index, the GDX, and short gold GLD, which is the ETF for gold itself. And this is again a relative bet. So in case gold does nothing, in case gold maybe goes down, you kind of hedged. But if gold really explodes to the upside, then the GDX is going to way outperform gold itself, and you have a great trade to the upside. This is basically this kind of a trade assumes if nothing happens, you're okay. If gold slides down a little bit, you're okay because you're protected on the short gold side. If gold explodes, you're doing really, really well. And then finally, and this is only a trade that I would do if, and let me go back to the gold chart. If the gold chart closes above 1600 on a monthly basis, we're at around 1553 right now. The reason why I say this is because technically you see that the gold, this is 1900, to the peak of gold, and there was support from 1900 all the way down to about 1600. So former support now is current resistance. We need to clear that resistance on a monthly basis. If we see gold trade and close above 1600 on a monthly basis, that is a massively strong technical buy signal for us that we have a chance to go to 2000. That's when I would trade this idea, which is basically what I call kind of a intelligent lottery ticket idea. You simply buy monthly calls on the GLD, on the gold itself. You buy the monthly calls, 50 delta calls, meaning at the money calls, and you sell the delta 25s, like maybe $5 down the road, down the money, on the weekly side. So what happens? What happens basically is if gold kind of gets up to 1600 and doesn't do anything and stays stationary, the premium that you sell in 25s on the weeklies basically pays for your monthly premium. If gold starts to rally, you're going to make the vertical spread. You're going to make the money in a difference between the higher strike price and the lower strike price. And doing that continuously, you're basically, what you're doing is you're constantly buying the rally and paying for it while it just consolidates and explodes higher. So you buy, pay, buy, pay, buy, pay, buy, pay, buy, pay. It's just an interesting way to participate. By buying the monthlies, selling the weeklies, you essentially get to stay in the trade without having to lose money on a month-to-month basis. So those are my ideas, and now I want to turn over to Kay to talk to you a little bit about FX.
Well, my currency ideas are far simpler and less complicated, and we touched upon them quite a bit when we talked about how I look at the markets, as well as the general outlook for the individual currencies. We talked about how the worst is over for the Eurozone, and how the UK is just beginning to feel the pain and the consequences and the costs of Brexit, and how the ECB, they have run out room to ease, and we're beginning to hear optimism. Whereas the Bank of England, there's a very good possibility that they could lower interest rates in the first quarter. So euro pound is currently trading at about 85 cents. And honestly, this is something, these are thematic trades that, need wide stops. And what you're looking at here is definitely a longer chart of euro pounds. And so, it's trading at 85 cents. I think that that represents, pretty good value, 85 cents with a stop maybe at 83 cents, targeting a move back up to 88, 89 cents. I think that's a feasible trade for 2020. I think, there's a very good possibility you're going to see monetary policy divergence. And when there's monetary policy divergence, that certainly creates the biggest opportunity. The other trade that I really like is and this just kind of details that I had in the heat map. That was basically the details. If you clicked on any of the currencies on the heat map, you would see these details. And this is. I
was going to say, just to add to Kathy's point, this week we actually had one of the UK monetary policymakers state that he's seriously considering a rate cut, given the weakness of the UK economy. So this whole idea of monetary policy divergence really could be a big driver, which is why euro pound, as Kathy said, looks like a really interesting long-term thematic trade.
The other trade that I like a lot is selling Australian dollars, and I just like it generally. Selling Australian dollars, we talked a little bit about how New Zealand is probably going to outperform Australia. Maybe Aussie Kiwi is a good short trade. I also like Aussie CAD to the downside. The challenge with the Australian dollar is that it's oversold already. But I think that data has been relatively good, and we haven't necessarily seen the negative impact, and we haven't seen the data show the impact of the wildfires. When that happens, I think that it's going to awaken the notion of another rate cut from the Reserve Bank of Australia. So while Aussie is very weak, if you take a look at it on a 2-3 year basis, this longer term monthly chart of Aussie CAD shows how there's still quite a bit of room to the downside, because it doesn't really bottom out till 80 cents. So I think selling Aussie CADs at about 90 cents right now. I like the idea of selling it with a stop at maybe 92 cents, targeting a move back down to 86 cents, maybe even 85 cents in Aussie CAD. And that similar type of idea can be parlayed into, Aussie Kiwi, Aussie dollar. Aussie Kiwi is trading at around 104. I think if you sold that with a stop, probably above, 105, 75, targeting a move back to parity, that could definitely be an interesting trade this year as well. So that's basically how we look at the markets, and those are basically what we see as the best trades for this year. Personally, my goal for what I do every single day is to make 100 pips a week, 300 to 400 pips a month, 3,000 to, which basically amounts to 3,000 to 4,000 pips a year if you do the math out. And in order to achieve that goal, what I do is I use a combination of my overall fundamental views, and I try to update those views for our members so they could identify the trades themselves whenever they see the indicator zip trader setup that I showed you earlier. And we're doing well. I mean, in the past 6 months, we're up 1,300 pips. This week so far, we're actually up 165 pips with the Aussie CAD trade I just closed earlier. And so, we're well on our way to 100 pips a week, and I invite you to join us on this journey of making 100 pips a week, 300 to 400 pips a month, 3,000 to 4,000 pips a year. And while it may seem like a lofty target, if we do target 100 pips a week, I think it's an achievable target, and something that we could definitely look forward to.
Absolutely. So we have a very special offer for you if you're interested in taking trying us out. Um, Generally, our subscription is $175 a month, but we have an offer for you guys if you take it up within the next 48 hours to get everything that we offer, the full chat room, not just Kathy's Forex trades, but all of the indice trades, which I started doing, which can add to that PIP total that we talked about, plus a super, super special gift of 3 free courses: the Euro trading course, the Secrets of Trading Pound and Yen and Swissy, and the Commodity Trading course, which by themselves are like a $575 value, totally 100% free to you to keep, even if you just hang out with us for one month. Obviously, we'd love to have you for much longer than that. So all you have to do to capture this, because it's going to go away, in 48 hours, is follow this link. Let me just, let me just go to a different screen and get this link for you guys, and I'm going to send it to you. Now, don't worry if you can't get this link right now. We're obviously going to send this to you in an email. All you got to do is just make sure when you get the email from us, you click it. But if you want to fill out and sign up right now, hang on a second. Let me just make sure I got this properly copied. I want to copy this. Let's see if I can and send it to everybody here in the room. Okay, send it to all. You should be able to have it. But don't worry, we will have all of this for you in email. Now, in addition to that, if you are a non-U.S. person or a non-North American person, if you happen to be a citizen outside of North America, we have a super, super, super special deal with Pepperstone, which is one of our favorite brokers in the world. They're fully regulated out of Australia. They trade everything, including indices and all of the commodities that we talked about. So you can trade everything through them. And if you do not live in the US or Canada, you can actually follow this link, which I'm going to send it to you as well, and get everything that we offer you for free as part of your Pepperstone account. So you would have to make a deposit, and there's details on that in this particular page. So let me just send that to you guys as well. So you should be able to have both of those links now. And if you're an Aussie, this is like one of the greatest advantages of taking it. Most of you may already have an account with Pepperstone, in which case all you have to do is just simply top it up with equity, and you're going to get access to everything that we do for free. So we love having new members because they get so excited and they're so interested in it. Like the moment they kind of see the process that Kathy goes through every day. Literally, I can't tell you how many people tell me all the time, I've been trading for 10 years, never made a pip, couldn't even understand how the Forex market goes, just complete frustration. And like now, within the first 2 or 3 months, I suddenly see the light. I finally understand how and why things work, and what makes, how you can make money trading this stuff. And that's because we're very unique, as Kathy was saying. We don't just trade technicals, which by themselves are very useful, but not complete. It's the combination of this fundamental analysis and technicals that really puts us above the rest, and that's what creates the process that makes some very, very interesting trades. There is this one member of our group. I don't want to single him out because I haven't, asked his permission, but he just posted something in our chat room which just blew my mind. I think he was up like 16,000 pips or something like that, and he said that 80% of those trades. I mean, he's crazy. He trades all the time. Were BK signals off of the visual indicators that we have. So there's 100 different ways that people use our service, but basically the best and most common way is to simply follow the swing and the day trade ideas that we have, and that's why we'd love to have you guys join us. Any questions? Feel free to write to us at contact@bkforex.com. If you have any questions right now, feel free to post them. I'll be happy to answer them. But whether you you want to try us for a month or you want to try us for a year, we'd love to have you on board. We love new members, new ideas, and I think you guys will really enjoy the experience.
So I have a question here about whether we still offer the 12-month coaching program, and does these packages include market map or trading tools like Zip and Runner? Yes, we still offer the 12-month coaching program, and yes, this includes the market map or trading tools. That's basically what I showed you on the chart, which is Zip and Runner is what Boris uses.
I'm actually glad you asked me that, Patty, because coaching for 220 is going to be actually super interesting. We have the strategies that make money. That's already in the bank. But I think what everybody is missing, and like this was a process. I had a couple of weeks off for holidays, and I really thought hard about a lot of these things. What everybody is missing is not the strategy knowledge, which we have. What everybody is missing is the psychology knowledge. And I don't mean just like, a pep talk about, oh, you got to be disciplined, you got to do this. I have been thinking about how is it that I have myself reformatted my own approach to make sure that I don't do stupid things. It's the doing of the stupid. We all know how to make money. It's the ability not to lose money that differentiates winners from losers. And the coaching for 220 is really going to focus on all of these very, very practical, none of this, touchy-feely, be disciplined approach. Really, really practical ideas that I've put into my own way of trading that have made a radical difference between how I trade now and how I used to trade before. And that's why I think coaching is going to be so super interesting this year, because I'm going to give you practical advice from the broker to asset class to size to trading to the way you're going to trade. That's going to make a huge difference in just actually making sure that the strategies that already when they work can be executed. It's the execution where everybody fails.
So another question we have is, do you post the trades in a room or a platform to view? I don't know if you're able to show it from this computer, Boris, but we actually send you.
Yeah, we do. Let me just see if I can. Let me just bring
we send you the trades 3 ways to make sure that you get them. One is over Slack, our 24-hour trading room. We also send it to you through Telegram. So you can get them in a Telegram chat signal, and you can see in this, right? Here, I show you the chart for the Zip signals. I give you the reasons why. You can even go up, Boris. We've got, in this channel, you can go up a bit more and, show more, and show how we were up 100. This is a good one that shows how we were up 152 pips this week, and then that's not counting the pips that we made in Aussie CAD.
Right.
Telegram, and we also email you the trades, but email is like the slowest because email has delays. So push notifications on Slack and Telegram is the fastest way to get all of our trade ideas.
Exactly. And
does the membership service include the heat map? Yes, absolutely. Includes the indicators and heat maps. Those are member only benefit.
Yeah, benefits. Exactly. So what else is what are the questions? Thank you for showing this. Great presentation.
Patty asked you, there's a coaching part of this package. Coaching is part of our 12-month package.
Yes. So in order to get coaching, just sign up for an annual, to be an annual member, and you'd be part of it. Or better yet, the really great thing is to be a lifetime member, because we have this incredibly cool lifetime program where it's not like a lot of money up front. We can do it so it's very, 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 very manageable on a month-to-month basis, and within 15 months you now have access to us for life, for everything, courses, coaching, signals, everything. It's an amazing deal. If I was a customer, that'd be the first deal I would do. So those are the choices for everybody who wants to really get involved in trading. We've made it as easy as possible now in 2020 to give you the opportunity to trade. Indices, Forex, commodities, you name it. We're trading every day from basically 4 in the morning until 8 at night. Like literally the only time we're just kind of not around is between, and not even sometimes Kathy's putting out signals at 10 at night. This is New York time, and I sometimes enter into trades in Asia session indices if we get opportunities. So we're very, very active. But the point being is that if you're interested in trading, it's not just the signals that we do; it's the strategy, it's the psychology, it's all of the full method to help you become a true trader for life. I think is a great effect. The people who join us the most are the ones that really, really use us for all of our tools. So hopefully you guys will enjoy it. Try us out. I'd love to have you guys on board. As I said, it's a very, very exciting year with lots and lots of different instruments to trade. There's literally no boring day in FX, because if currencies are boring, stocks are flying. If stocks are boring, currencies are flying. And if those guys are quiet, gold is flying. So there's just literally no boring days in FX. And actually, Kathy is amazing. I mean, we talked about the idea that FX is at the lowest volatility in its history. Nobody can make money in currencies. And she has been able to make money week in and week out in a low volatility environment. You can imagine what happens if volatility explodes, how many more pips she makes. It's been an amazing run for her. So that's why I think you guys should really join us. Let's see if there's anything else. No, I think that's pretty much it. As I said, we'll send you all the links. Please make sure to give it a try. It's going to be about we're only going to be able to offer this for you guys for 48 hours. So if you want to try us, please do it very, very soon. Any final questions? I'm happy to answer them, but it looks like we're good. Anything else you want to say, Kay?
Nope. I'd like to thank all of you for joining us. And if you do have questions about anything we discussed or anything that we do, you can always email Kathy@bkforex.com or Boris@bkforex.com. I'd be more than happy to answer you personally.
Yes. And the one final thing about kind of joining us, we are here all day long. One of the great things that people love is that this is our chat room. You can talk to us in private all day long. You have any questions, just message us. We are very accessible. So that's a huge benefit, to us. We are here for you night or day for any kind of questions, whether it be a broker, whether it be market, whether it just be actually a strategy analysis. Hopefully you guys will all enjoy that. Thank you again for coming. We loved doing the 2020 preview. We'll send you the video very, very soon. And everybody enjoy. Happy New Year.